All right, for more on Disney's earnings, let's bring in New York Times columnist James Stewart, who joins us on the Fast Line. He is also a CNBC contributor. Jim, great to have you with us. What did you make of this quarter?
Well, I guess I'd call it modest progress, given the Iger strategy of focusing on cost cutting and eventually profitability. It'll be interesting to see if he's going to come up with an estimate of profitability on streaming. So we did see, a decline in the losses at streaming, but at the same time, you see those secular forces that are afflicting Disney. The fairly significant decline in the linear programming, the traditional TV cable business, which is going down. And again, I don't want to get too much into accounting, but the overall operating income is not as good as it looks because they had that $1 billion one-time charge a year ago. So there was actually, when you strip that out, it was a little decline again in the quarterly earnings. I think investors were a little bit disappointed in that. Great performance at the theme parks, no question about it. But you've had the reopening in China. Theme parks can only grow so much. We know that you can only raise prices so much more there. You can only squeeze so many more people into this park. And so that's just kind of a given. I think streaming is still the story. And we still haven't seen a model here that looks like it's ever going to rival the profitability that they enjoyed in the glory days of cable.
So do you think that the best days of Disney are behind it? I mean, I'm just wondering, Iger, how he, what his sort of playbook is. And I'm just wondering what you think of how he's thinking of the return here. I mean, it seems like it's going to be harder than ever for Disney to reclaim its so-called magic, given the competition in the streaming landscape. And that's sort of the focus right now of investors. How can they get to profitability there?
This is tough. I mean, look, Disney's a great company, and I don't think they had any choice. They were confronted with this situation that, really shook up that wonderfully profitable world they enjoyed for so long, and they had to react. But this is a fiercely competitive environment. I was just in L.A. For a while, and I talked to a lot of studio people who were saying that, Netflix and Amazon and, to some extent Apple, the spending race is still underway. They're still pouring the billions of dollars into that. And Disney, if they want to play in that league, has no choice but to compete. Now, the writer's strike is going to help them, probably more than anyone else, because there's an enforced truce in the arms race there. How long that goes on, we don't know. But that's only pushing it down the road because spending is all going to have to come back. How much can you cost cut and still maintain that subscriber base, which is now obviously has kind of flattened out? If you cut costs too much and you don't have the new programming, people, it's so easy. You just stop the subscription and wait till they come up with something new that you want. It's a very, very tough business, I think. And you've got these unbelievably deep-pocketed competitors in Amazon and Netflix that you're up against.
James, when you see the offering where he's combining Hulu and Disney, is that just out of the sheer fact that most people in a certain age group are never going to buy Disney streaming? Do you think that's going to move the needle for him? Because that would be a little more palatable if you have a Hulu along with the Disney, because then you just buy it and you'll get it as a bonus.
Yes. I mean, there's no question that the Disney Plus brand is very family focused and, child friendly, teen, they've got, and then that's good in some ways. It's got a very clear identity, but it's not going to be big enough to get to the Netflix and Amazon numbers. And if streaming really is the scale business that everyone says it is, and as far as I can tell, it is, because there's almost no marginal cost when you add another subscriber. Yes, they've got to get beyond that core brand identity, and Hulu may be a path to do that.